There was a question on Al's trading course website, and I'm really just going to summarize it. And really what it was they were asking about this bar, the 920 bar. By the way, all my times are in Central Time, so that's 2 hours ahead of Pacific Time where Al is. But anyways, they said, Al, it's great that you mentioned these always in trades. However, it'd be more helpful if you gave more insight to when to get out, how to manage it, this and that and this. And, you know, I'm just going to say it, but this person needs to, if you're listening to this, my first comment would be to revisit the videos, because there's not one simple reason why traders always in bulls buy above this bar, always in bears get out. I can name a couple. Number one, strong enough breakup for at least second leg. We had a two-legged pullback. Therefore, if always in bears got out below this bar, or if always in bulls got out below this bar or on this close, we had a second leg down. They've got to get long again and buy above here. We have a double bottom, and we may get a measured move up. This is a breakout mode situation. It's not a perfect breakout mode situation, but really the range is small enough that it's probably going to double. Therefore, we have to be thinking about maybe this. We'll probably get a measured move based upon these two bars going up. We gapped below the prior day's low. Therefore, if I draw a line right here, we broke below it, turned up, broke below it, turned up, broke below it, turned up. I could find more reasons. Strong enough bull bar that even if we get a bear bar down here, bulls will probably buy. It's a surprise bar. This is a surprise, probably get a second leg up. This bar is a surprise, probably get a second leg up. Even though we had another big bull bar, so now both of these bars are big enough, we'll probably get a second leg up. Well, what about here? Strong enough, probably second leg up, which we arguably did over here. So anybody can say that Al's not showing enough. It'd be more helpful if Al gave more examples on how to manage the trade, this and that, but it's not that simple. There's 100 different ways to manage the trade. So that's really all I'm going to say with that. If you're watch more videos, look at his webinar, and that's all I'm going to say with that. I mean, the reality is you got to study. I don't know how to put it anymore a different way. But I'll review a few days since I'm recording a video. And I'm only going to show always in. And I don't know, I'll do a few days. Maybe I'll do 10 days. We'll just see. But I'm just going to go all, I don't know, right there. So here's November the 6th. We'll go to the 7th. We had a gap down, always in short, but tight channel. Probably second leg down, but may rally. And we ended up just rallying. One thing with this, when you get these examples, the problem here is, this is arguably a tight channel on a higher time frame. So there's always the risk that you're going to get something like this. And which is, what happened, but we gapped above it. And then we got a bull breakout. But anyways, if I do that, I'm going to get carried away talking about that. Trading is all about, you got to be almost kind of dumb. And the best analogy I can give is if you keep running into a brick wall, eventually you'll break the brick wall. I see it as that simple. There's a million things you got to learn, but if you just be persistent enough, you'll eventually learn it. You got to be persistent, don't quit, and you'll get there. But so number one, I would say you got to trade something that you can trade reasonably. Now we have the micro futures, so that should not be a problem for anybody. If I would certainly trade micro futures. In fact, I'm planning on trading micro futures. I would study. I would trade micro futures. I would get Al's webinar. I would watch Al's webinar. I would watch Al's webinar at the end of the day. I would watch Al's webinar on weekends. I would watch the videos. I would practice trading. I would especially practice always in trading, which is what I will be reviewing in this entire video. And what is always trading? Well, you're trying to find the swing trades. So let me go back after I've given my 2 cents. Tight channel. We don't know if this is just a pullback 50% from this rally, and you can see this pullback is roughly 50% from here to here. When you get this odds are this is a bear flag. However, the tighter the channel gets, the more traders may give up. And you can see traders sold to close, sold below, and got out. And we ended up getting a bull breakout of here. I want to show something real quick. And by the way, I know full and well that I'm random with some of these videos. The reality is I make these videos for the simple fact that, do I hope it's helpful? Of course I do. I'm just sharing my thoughts aloud as I'm studying or looking at the market. That's all I'm doing. So, there is no structure for this video. I'm looking at always in, and I'm going to share a few thoughts along the way. Someone mentioned here, they asked Al about, and this is Al's price action website. If you're a member of the trading room, click here, you can subscribe. It's a great thing. You can ask Al a question every day. Anyways, you can read this question right here. I'm not going to read it to you. But basically what he's saying is, Al, you mentioned during the day traders could buy up here and buy more down here and get out break even. So imagine if you buy one contract here, you buy a second down here, break even's going to be just about here because you're going to make a profit from here to here and you're going to lose a profit from here to here. And what this person's saying is, that sounds great and all, but if the person would just go short here and buy back their shorts here, they could more than make up the loss and actually even make a profit. And that person is exactly correct. You hear Al often say, he talks about how 90% of the time you can avoid a loss, or 80% time you can avoid a loss. If you buy here, buy more higher. Al doesn't normally take those trades all that often, especially in a situation like this. He would more take, buy this low, buy more lower, scalp out. I would not recommend buying here and buying more lower. Institutions do it. But it's kind of tricky because you can lose a lot of money real quick. So what Al would do, because I know he would, he'd buy closes, he'd stop buying, he would sell for scalps. Then he may, in fact, buy here or buy here and take a profit up here, betting that you have the break-even bulls that'll exit. So that is just, if this person happens to be watching this video, or maybe you've had that thought, there's your answer. So let's just go with the day on the open. So anyways, here is the end of the day. You can see a strong rally breaking above these highs. Then we had a strong gap up. Okay, so right here we're far above the moving average. So the question is this above average price action? Well, so far, arguably it might be. We have a bull bar closing when it's high, reasonable buy above. However, I really don't like buying that high above the moving average because most days you test the moving average before you go a lot higher. Therefore, you can buy above it. I would definitely get out of shorts if we got a bear bar closing on the low on the next bar. And there you go. So you can buy above it, get a little follow through, but there's your bear bar. I'd get out of shorts below. Like I said, I don't like buying this high up for that exact reason. You have to think about stop placement. It's really, really difficult because the moving average is all the way down here, but every bar, you got to think about it. The moving average, this is a 20 bar exponential moving average, which basically means that it is a reflection of the past 20 closes to the left. Therefore, when you get a big bar, when you get a close up here and a close up here, it drastically alters where the average 20 closes are. So we'll get vacuum up real quickly. So if your stop's here, you may have the moving average down here, and we may have to race down to it. Therefore, I really don't, maybe if you get a second entry, maybe a wedge bottom, but typically it's safe to say most of the time you don't go straight up. You go sideways to the moving average. Okay, so always in short, probably a small second leg down, but it's a big gap up, so it's strong. But if I do anything, I would sell, stop up here. Bad follow through makes me a little nervous. I still think it's strong enough for second leg down, and we are always in short, but always in short in terms of what I think we're testing the moving average, and this is a pullback ultimately in a bull trend. Okay, bad follow through. I would just get out, and that's exactly why. You had your small second leg down. Bulls, the smart bulls will do one thing right here. They're gonna buy, just for fun, kind of little fact. Bulls are gonna buy, smart institutional bulls or astute traders will, that word Al likes to always use, I think it's kind of funny, will buy this low and buy more lower. So some will buy here, buy more lower, knowing that we're probably gonna test it here, which is probably true. But more importantly, there's buyers down here. So you gotta be careful with this. This bar is important because the bears, were we always in short right here? Maybe. The bears probably needed one more bar. And because they didn't get their one more bar, found buyers. And we may test all the way up to here. We may test back to this high close. Tight channel, I would not be long right here. I would want to see more. Plus, I still think we're going down here. So ultimately, I think we've had in regards to this bar, we've had, 2 bars up, a couple bars down, big up, big down, sideways. Bad follow through. Surprise bar, strong enough for a second leg up. I think we will get a second leg up. It's probably a bad low one short. And this could be our second leg up. So here we go. We're starting to get, 3 consecutive bull bars. Are we always in long? Yes, but this is a statement. The bulls were up here a few minutes ago at the open and we sold off. So what do I think is going to happen? I think we're going to top, and I think we're going to sell off and get to the moving average. So I would not be all that eager to be long right here. You have buy the closed bulls. They buy here. They buy more lower. Maybe they buy above here. They'll get out of break even. And that's actually what happened right here as well. You have bulls that'll buy. You have bulls that'll buy more above here, and that's their break even price. It's also about a 50% pullback of, well, it's a couple things. It's a 50% pullback of the sell-off. You have bears that'll sell this high and scale in higher, betting that they can get out. It's ultimately a bad stop entry buy. So if I sell the high at 87 even, I can scale in. And look what happened. We went back to 86.25. So I could have made a profit. Let me make sure that's right. Okay, yeah, it is. These bars are a little bit bigger than I thought. But either way, always in long, probably going a little higher. Bull breakout bar. So, we may not test the moving average. So it's okay to be long. Odds are this is a surprise and you'll get a small second leg up. Doji, so disappointment. That means that, it's a little bit of a warning, but I still think strong enough for at least second leg up. Okay, inside bar. Probably buyers below, but, again, you got to be careful. Certainly okay to get out of shorts or get out of longs. Okay, I'd get out because it looks like we're starting to form a top, and I think we're just going to test the moving average. This is a problem. We're breaking above the high of the day, and then we're just going sideways. So what does that think about it? Bulls, what are they doing right here? Okay, bulls are buying. Why? Well, they're buying because they think we may test up here. Now we're this far away, so you got to ask yourself, if I sell this close to my stop above this high, I'm risking from here to here, from this high, this close to this high, betting on what? Maybe a measure move down, or maybe price going to here and breaking below and testing the low, the close of yesterday, which is why we're right there. Sure, but my risk is tiny, my reward is huge compared to my risk many times the risk reward. Therefore, it's a very low probability that we're not going to go above it. And if it's a very low probability that we're not going above it, it's a very high probability that we are going above it. So I could buy this close, betting we'll get up there, and that's exactly what happened. But bad follow through. I wouldn't go short yet. You got to be suspicious. The bulls are just not, the bulls aren't doing enough, but the bears or not doing enough either. If I was a bull and I got out of shorts, what I'm gonna say is, okay, I wanna see what the bears can do. What can you do, bears? And I may wait for a few bars sideways to down, but if we just get sideways, eventually I'm gonna wanna buy again. So going sideways, tight trading range, sideways, sideways. Well, and by the way, right here, 3 pushes down, 1, 2, 3, 1, 2, 3, getting very close to the moving average. Strong enough surprise, you may have to think, hey, maybe this is the middle of this surprise. So we have one leg, pull back, second leg. So if I was short, I would definitely get out of shorts above that bar. It's okay to buy, but you may go outside down in the moving average. So if I did buy, I'd use a stop down here because this is support. Okay, bull bar, probably okay to put a stop down here. Another bull bar, buy the close. But what do you notice? Bodies are getting smaller. We had a big body, smaller body, smaller body. The one thing you also got to be careful about, it is always in long. You have a small pullback bull trend. You also have gaps. Whenever you see a gap from here to here, you always have to be, red flags have to go off, and you have to be thinking, this looks like a trading range, but the bears sold this high, trying to get out, and they're not getting out. So you notice each one of these is a little higher low. So if you sold here, you didn't get out here, you're thinking, darn, I should have gotten out. Okay, I'll try again. And you couldn't. Then you say, okay, I'll try again. And you couldn't again. It's forcing you to buy at a worse price if you're buy back your shorts at a higher price. So you gotta be thinking of that. So I think we will pull back. I think we're channeling up, but I'm not sure if we're gonna fall below here. So I certainly don't want to sell. No way I'm selling. I still think we're gonna get to the moving average. 99% of days touch the moving average at some point. Okay, we're pulling back, but small bars. You can be long. I don't know. I certainly wouldn't be short. I think it's kind of player's choice if you want to be long. And for me, I'd rather touch the moving average. I'm suspicious right here. I think it's okay to buy, put a stop down here, but I think 50-50 chance we're going to fall and get below the moving average. And I think that's what's happening right here. We're so close to it that we've got to touch it. Okay, we touched the moving average. 3 pushes up, 1. And by the way, strong enough for a surprise. This may have been strong enough for a second surprise up. This could have been strong enough for 3 pushes. 1, 2, 3. We're at the target. Also, I want to point one more thing out. This is an obvious measuring gap. Here we're very close to the measuring gap, and when you start to turn down from an obvious measuring gap and you're fairly close to it, you always have to be suspicious that the market's trying to trap traders. It's trying to, the market's always trying to confuse people and confuse traders and make them make difficult decisions. What would be a difficult decision? Well, one would be if I had a target up here, do I get out below this bar or do I hold for my target? So if I did get out, very often you get a pullback and you retest the target. And now we're clearly at the target. Okay, so for always in, 3 consecutive bear bars, can you stay long? This is not a great always in trading right here. This is a very tight range. I would just get out of shorts. There's not a lot of profit potential. 50-50 chance. You got to ask yourself, what's the directional probability? If my stop's down here, that means I'm right here. So 1 times my risk is up here. I don't think we're going to get there. So the next choice is, okay, if I put a stop here, probably 50-50 chance we fall below here to here. So just not great math for swing traders. Okay, trying to become always in short, 4 consecutive bear bars, but fairly tight channel. Trading range day, you have to think that although we've been trending up and we have a spike, strong rally, and 3 pushes up, you got to be thinking we have an obvious gap, start of the channel right here. We may test the bottom of the channel, and we may form a trading range day. But tight channel, first reversal down may fail. I think we're trying to become always in short, but I'm not all that impressed with these bear bars. So I think the bulls need more. And okay, that is reassuring me that my decision is right. I don't think we're always in long. First reversal up may fail. This may get a small. This could be a surprise and you get a small second leg. But you just go straight up. It's also a moving average gap bar, so it may lead to the possible final flag. Bulls want a double bottom and measured move up. Okay, bad follow through. We have a wedge top, 1, 2, 3. often when you have, and remember this gap because we may fall below it. Very often when you get a wedge top, 3 pushes, 1, 2, 3, 50-50 chance you break above it and fail. I think the odds are higher that we were going to fail when we got above it. And the reason for that is this may be strong enough to reset the count. So 1, 2, and 3. Now, here's the problem you're facing. So I think this will fail, but what do we know? What are we getting right here? Micro channel. It's subtle, but we've been getting gaps all day long. And when you get gaps all day long, you can easily look back on the day and say, you know, gosh, we just drifted up, and next thing you know, we're closing all the way up here. So you gotta be careful of that. And it looks like we're doing that. So we're getting looks like we're getting a breakout of this. You can call it a trading range. You can call it, you know, I don't think that's as promising. I think this is more likely from low. This is a very obvious measuring gap from this low to here. It makes me think we're gonna go up here. Very tight channel, and no way I'm gonna sell. But you're getting sellers. You're getting sellers because you're having profit taking. So I don't think this is all that easy of a market to sell. Probably buyers. Okay, and you're getting buyers. So why probably buyers over here? It's always in long, it's buy the close. Bulls are gonna buy the close and scaling lower, confident that they can get out of break even, which is what happened. And in fact, it's still a tight channel. So, you know, this may just get, let me try to explain that better. It's always in long. Some bulls are gonna say, hey, you know, screw it. I'll buy here, buy more lower. I'm not gonna take profits because we'll just go sideways. So I'll have plenty of time to get out at this high close, and it's not like I'm gonna have one opportunity. Okay, second inch or short, but not at the moving average. I think this target's so obvious. I think we have to get there. So I wouldn't sell. Okay, we're at the target, so mission accomplished, but extremely tight channel. Probably the best the bears are gonna get for the rest of the day is sideways, and we'll probably close somewhere in here. You know, maybe we'll try to get to this low, but I doubt it. I would certainly get out of shorts below. I'd get out of longs below. I don't know if it's worth selling, and that's why I don't know if it's worth selling. But at the end of the day, strong rally. So just as I said earlier, this whole time, this day it looks like a trading range, looks like a trading range, looks like a trading range, but you get a gap right here. You get a gap, you get another gap, then you get another gap, and then you get more stuff, you know. So you always have, and then here's a gap over here. So you have to be aware of these kind of days. They're so easy to get suckered in. And I made a video the other day, probably the prior video before this, about these are the strongest kind of moves because they don't get parabolic, they don't get climactic. Strong move, sideways, so it cools off the move. Strong move, sideways, cools off the move. Strong move, sideways for a few bars. Strong bar, odds favored a small second leg up, then we went sideways. So we don't get big bars. And if you don't get big bars, nobody's fully certain if it's climactic behavior, which it is, but nobody's sure if it's exhaustive enough for traders to short. Okay, so we gap down below the moving average. Probably an okay buy, but again, 20% of days are the low of the day. So I would not be all that interested in buying above the bar or below the bar or selling above. I think traders will sell above the bar, but kind of tricky on the open. You may get a big bull bar, kind of like that. So then what do you do? So always in long, yes, probably going a little bit higher. Okay, doji. So what do you notice here? Bulls didn't make money. They tried to sell it. Bears did not make money selling high this bar and scaling in. They may get trapped. So this is why I said I wouldn't sell the high. These bars are small, but pretty much every bar except maybe the third bar of this day is a bull bar. So probably going higher. Okay, looks like bears are going to make money selling this high. So looks like a trading range. Okay, so what did I say over here? 20% of days have the first bar of the day being either the high or low of the day. Therefore, not all that great to buy above and hold. This is very weak buying pressure. Odds favored a move down. Strong enough breakout, probably second leg down likely. So you can be short, but I don't know if I wouldn't be short at the bottom of this tight range. Also, we've been in a fairly strong trend, probably going to go sideways for many bars. Okay, and that's why I said I wouldn't be short. If I said I wouldn't be long, I meant to say I wouldn't be short because bottom of the range. Strong enough surprise may get a second leg, but strong enough surprise bar may get a second leg. This may have been the second leg bar. Probably buyers above, but so far tight trading range, not a great market. Surprise, this may be the second leg down. Okay, double bottom, okay, buy, stop below here, arguably a wedge, 1, 2, 3, so a triangle. Breakout mode, 50-50 chance, first reversal up or down fails. Okay, just getting a lot of buying pressure, a lot of bull bars, not many bear bars. The bulls are owning the market in terms of time. They have more bear bars, they have more bull bars on this chart so far for this day. The bears are getting bigger bodies than the bulls are getting, so they're owning it in terms of price, if you will. But I really think it's 50-50. If it was clearly high probability, would be going one way. Okay, triangle. So more obvious, 1, 2, 3, 1, 2, 3. Probably an okay buy. Maybe stop below here, but 50-50 chance first reversal up or down fails. Okay, decent follow through, probably going a little bit higher. Could be a double top, so I don't know. I'd probably get out below that bar. And it never triggered, and now it triggered. So terrible so far price action. This is important. This is going to play a huge impact probably on the day. Although we'll probably get a measured move down or a measured move up. This is going to be hard for the market to get rid of. So probably a lot of trading range price action. Even if we get a bull breakout, I think we're going to form a trending trading range today and go sideways. If we get a bear breakout, I think we're going to form a trending trading range. So if we're always in, it's a bunch of stop entries. So far, I think we're always in long because the bulls have better buys than the bears. The bears just don't have clear stop entry shorts. Every one of them's below a bull bar. Here, 3 pushes up. Always in bulls probably get out, but again, this could be a major trend reversal. So we have a bull trend line break, and we're testing up to the highs. So let's see. So far, we have a double top here and here, double top with here and here. The bears want the measure to move down, maybe testing the bottom of this channel. When you get these double tops, they usually never look all that clear, and they're constantly trying to get you to get out and trap you out of the trade. So we could get it, but who knows? Generally 50-50 right now. We've been sideways since the open. Okay, so possibly strong enough bear bar, second leg down. Well, we have the second leg. So I had to get some coffee real quick, but 3 consecutive bear bars, probably always in short. Still though, not clearly always in short. If I was short, I'd put a stop above this high. I want small risk because my probability is not great. Therefore, if my probability is not great, I want decent risk reward. I still don't think this is all that great of trading. 3 consecutive bear bars, so probably always in short, probably sellers above, probably stop up here. Trading range day, first target, open of the day. I generally make those green because Al makes them green, and all these years of watching Al on the webinar, I'm just used to thinking of the open in terms of green, gaps in terms of purple. Anyways, well, I'll put that back since y'all are watching here. And again, guys, this is what I do a lot. I don't do it enough probably, but my whole goal with these videos is to just give you insight to thinking, looking at the charts, just drawing conclusions. So channeling up, try to form a trading range. We had a leg up, probably bull leg in a trading range. We'll probably have a bear leg in a trading range. The bears ultimately want measure move down. So we can get it a few ways. We can get it like this. We can get it maybe from the, markets often have symmetry, so maybe from the open of the day, from the high of the day to the open going down, takes to the bottom of the channel, maybe from the lows. But I'll keep that there for now just to paint so we can remember. Probably sellers above, a little bit more down, but looks like a leg in a trading range. Fairly tight channel. I think we're gonna fall below that low, so I'm not interested in buying yet, but it's hard to stay short because we may get a deeper pullback than what traders want. And okay, that's why I said I'm not interested in buying, because I think we're gonna fall below this low. We're very close to it. And again, guys, when you're trying to think of whether or not you should be short or long, always look what the other side's doing. So what does the other side have? They have a great risk reward. They can buy above this bear bar, put their stop below, and clearly you can see if you were to buy, that's like 4 times your risk if we get a new high. Great risk reward, but terrible probability, which means we're probably going below here, and we did. Okay, testing the bottom of the range, close to the open of the day. I think we'll have to get there. Very tight channel, so this is a breakout on a higher time frame. It's a breakout. Probably sellers above, at least a little bit more down, and there we go. So this is why it's dangerous to buy when you're in scaling lower. You got to be careful, because you have to understand there's 40% chance, maybe greater over here, of a double top and measured move down. And the reason I say greater is because there's probably at least a 50-50 chance. A 50-50 chance we're going to test the open of the day. And, at this point, very tight channel, we're probably getting a second leg down, which means someone could probably sell this close, put their stop up here, and have a 60% chance of a second leg, and probably a 60% chance, if not higher, of avoiding a loss. Okay, bad follow through. So a warning that the bears are not as strong as they could be. But tight channel, possible small pullback bull trend. Probably sellers above. Okay, low one short. What do you do here? You can get out of shorts. I probably would get out of shorts. I just take profits. We're probably going to go sideways for a few bars, and you can probably sell again on a second entry. Okay, and like I said, we're going sideways. So this must be this is a Fed day. You can just tell by the bar, but it doesn't matter. Tight channel. As I said, traders may get disappointed, so may have a deeper pullback than what traders want. I'd get out. Sell the closed bears, scaling in higher, getting out break even. They gave up on this bar. Another big bull bar. And so what happened here? Well, traders will buy these lows. They'll buy more lower. This is traders trying to get out break even. Big outside down bar. This could be a surprise. Like I said earlier, when you get these double tops, they never look clear, and they're always trying to sucker you out of the trade. By the way, on Fed days, I would not sell the close of this bar. I get, because there's too much risk that the next bar is a bull bar closing on its high. It's a report bar. In general, 50-50 chance you reverse, even if it's a big bar. But when you get double tops, when you get double bottoms, 40% of the time they work, which means if you sell here, in general, 40% chance you get down to here. And often they're difficult. They just kind of drift. So, okay to sell, stop up there. I'd wait for more. And that's exactly why I would wait for more. There's just too much risk. It's that we're going to form a trading range. So if I was long, I would certainly get out of shorts above that bull bar. Would I buy? I don't know. Trading range, pretty high up. I wouldn't buy. Okay, well, it didn't trigger. So this is always interesting. And this is why it's really important to, if you're trading always in, it's better to get out above the bull bar, because sometimes it won't trigger. So if you're short, you may not get stopped out. You may still be in the market. This could be a 50% pullback if you're, so we'll see. Okay, inside bar. So what happened right here? Try to zoom in a little bit. Well, I can't really zoom in, but let's talk about what happened. Well, you have traders who will, I really don't like that. There we go. It's good enough. You have some traders who are going to buy 50% pullbacks. And some of them, the question is this a trap? Is this a second leg up? Are bulls disappointed and going to buy back sell out of longs at this close. They buy this close disappointed and they sell out of longs. We don't know. And if they are disappointed, then traders very well, let me go to this part. What happened here? Traders bought 50%, and what they do right here? Immediately turn down. So a lot of traders bought, scalped out. So now we have an inside bar. Probably a bad second entry buy. If it's a bad second entry buy, here's your first entry, here's your second entry. You know, imagine I wouldn't buy above that bar, which means you probably would not buy above it. And if I wouldn't buy it and you wouldn't buy it, everybody else may not buy it. And if it's a bad buy, generally it's a great limit order sell. Just as this over here, it's a bad stop entry buy, probably an okay limit order sell. Well, if it's an okay limit order sell, you may find sellers above. You will find sellers above most likely. If it's too obvious, it may not trigger. Kind of like right here, if this is such an obvious bad sell the close bar, we may not go below it, which means if you tried to sell with the limit order, if you tried to buy with a limit order at this close, you may not get filled. So anyways, may test down. Okay, we're trying to break below again. Going lower, going lower, going lower. And look what happened. We basically tested the double top, you know. So and one thing I don't know is this could be, if you took it from the high to here, this could be a little lower, maybe down here. So we may still go a little lower. But this is kind of what I said, with double tops, they often 40% of the time when they work, they're difficult and they're not always that clear. So what do I think is going to happen over here? Well, strong enough, clearly always in short, probably sellers above, second leg down, but bulls made money buying a new low. So I think the bulls buying down here, I think we're going to get back to this low right there. And you can see we did. Lots of profit taking. Trading range price action over here, trading range price action over here, open of the day right here. We very well may close at the open, but you know. So would I get out of shorts above? Would I get out of shorts above this bar? Yes. I would get out of shorts before this bar, and you know, probably 4, 5, 6 ticks above. You know, I know, as I said earlier, I know we're gonna find buyers. I know buyers are gonna buy below this low, and if we're 4 or 5 points below the low, I want to get out of the market because I know we're going to come back to the low. And that's just one of those things. It goes back to what I would tell that person that asked Al a question about, you know, if you would talk about trade management. Well, the problem with trade management is it's very subjective, and the more you know and the more you understand, the better you can be with trade management. So it's tricky. It's kind of like the whole thing of, okay, let's look at this chart. If I buy here and I see weak follow through, I know maybe 40-ish, 50-50 chance this is the low of the day. Therefore, there's a 50% chance we're going to test down. So if I'm long and I just get out, I can buy lower. There's a 50% chance I can buy lower, if not better. If I say, okay, strong rally, but bears made money selling this high and selling more higher. So when we're getting this, tails, I may say, gee, bears may sell again up here and sell higher. So if I take profits up here, I can buy again lower. And then same thing up here. If I sell out of longs up here, I can probably take profits and buy a second entry buy. You know, same thing right here. Okay. You know, consecutive sell climaxes, low of the day, bad follow through, low one short, but at the bottom of a trading range. If I just go ahead and get out of shorts and buy back my shorts, I can probably sell at the exact same price or better later on. So strong enough, we're probably always in long with this bar. I said buyers above, which I think there are. What I don't know is if we'll find traders. Traders may buy 50% pullback, which is what they did. You also have bears that will sell this high scale and higher. So always in traders, they were short, probably got out of longs, probably got out of shorts above that bar. Smart ones got out below here. What do? They don't buy above here because it never triggered. So 3 consecutive bear bars probably sell. Maybe they sell this close, going lower. In terms of here, you could buy above, but may end up going sideways. So if I do anything, I'd buy above. And, you know, that's part of the issue. But deep pullback, so no reason to go short. Trying to test the low close. If I did buy above here, I would definitely buy above here, probably stop down here. Okay, and there we go. So what are we doing? We're starting to rally. Let me try to fix the I want to fix. I don't like the spacing of these bars. Okay, like 15. Yeah. Oh well, it's good enough. Okay, so weak follow through, weak follow through. We're back at the open of the day. Target, you know, we went. That's the obvious target. Everybody knows it's a trading range. A lot of trading range price action. A lot of trading range price action. Maybe in the middle, so probably sellers up here. And everybody sold at the open of the day. Strong enough bear bar, you know, maybe a surprise second leg down, but this also may just be in fact a sell vacuum. Traders sell this close, sell more higher, getting out break even. So I would not be eager to sell. Bad follow through, maybe a small second leg down. We got the small second leg down here. Bull bar closing on its high. If I was short in any way, I would definitely get on shorts. I'd buy above, stop down here. Decent follow through bar. Bulls want a double bottom, measure move up. Okay, bad follow through for the bears, but probably, that's not bad, I guess. I don't mind that. A little more of a close up. And by the way, you know, you don't need 800 bars on your chart to figure this out. And I'm being sarcastic. You really don't. I mean, you can trade like this. You can trade like this. Player's choice. So I wouldn't worry too much about it. But what I am going to do is fix this, because this is going to annoy the crap out of me if I don't. And that was the 11th. 11/8. That was all the way over here, really. And there we go. Okay, well, that didn't fix it, but whatever. So, again, always in long. You can argue low two, double top, but it's a doji, probably buyers below after this rally, probably going higher. End of the day, so I would just get out, call it a day. And I feel like an idiot because I could have just done that to fix the scaling, but oh well. So again, call it a day. Huge gap down, but when we went below here, we found buyers. So below here, I think we're gonna find buyers. Gap down below the moving average, but certainly below average price action, so probably buyers somewhere down here. And I certainly wouldn't sell anything I would buy, but that's a little tricky on the open, because you may go further down than you want, like this. So now what do you do? You know, if you bought the close or bought the low and your stop's down here, you may very well get down there before you turn up. So not so simple. Surprise makes me think we'll go a little bit lower, you know, maybe 50-50 chance. I'm looking to buy. I'm not interested in selling yet. Okay, so hypothetical bulls that bought this low, scaled in, they're trapped. So always in short, probably sellers above. I think we're going to test the low of this bar, so I still wouldn't sell. I'm not impressed by this. Even though we're going down, this is not extreme. This is not far below moving average price action. So this is not exceptional bearish price action. Low and short, but I think bulls will make money. Okay, low and short, second entry buy. I think bulls probably can buy. Bears, I would get out to longs above the bar. Outside down, so may go a little bit lower. And so what's going on here? Well, the bulls are getting squeezed. Bulls that tried to buy down here and buy more above here, they're trapped. Bulls that bought above this bar, trap. It's also a micro channel, I forgot to mention that. So lowers the probability of this buy. But if I did take the buy, I would just take the loss below the bar and look to re-enter. Okay, so strong bear bar. You can sell the close, stop up here. If I do anything, I'd probably sell, stop up here. We're starting to trend down, but I want to get to the moving average. So, but like I said, it's probably sell the close, stop up here. If I do anything, I would sell. Going lower. So possible, make it 3 pushes down. One, 2, and then 3. Okay, there's a bull bar, but I'm not so interested in buying anymore. This is a lot of selling. I think it's okay to get out of shorts. I'd probably wait to buy. And okay, I was wrong. So probably going a little bit higher, strong enough breakout for a second leg up. But you got to be thinking maybe a double top measure move down. Okay, there's our second leg up. Close to the moving average, but bad follow through after this bar, so may get bad follow through after this. Bad follow through. Bulls probably get out below. The aggressive bears, maybe they sell. Fairly tight channel though. Okay, so good entry bar for the bears. Probably back to always in short. But I don't know, you may get a second leg up after this. So a weak sell-off, maybe testing the high of this bar. You probably got a big down, big up, sideways situation. Okay, I would just get out of shorts. I don't think we're going much lower. Could be wrong though, but I don't think I am. So what happened over here? Okay, odds bad buy, probably sell. Bad buy, probably sellers above. So bears will sell the close, sell above, sell more higher. Betting on a second leg down. We got the second leg down, but it's a low one short, bottom of a trading range. It's big risk. Stop above here, maybe here. Not great probability, which means probably buyers below. We found buyers below. You can argue low 2, low 1, doesn't really matter. It's a bull bar, probably buyers below. And because it's a bull bar and probably buyers below, some traders may just buy the close, betting we don't get below it, which would happen. Tight channel, probably sellers, and sideways. Not really great swing trading for the bulls, and you have to respect the channel. We haven't gone above it. And we haven't gone above it because the bulls aren't strong enough. And we're starting to fill up the moving average. I don't know. I'm not so interested in holding long below the bar. I think it'll fail, but this is a problem for both the bulls and the bears. Okay, outside up. Starting to form a tight trading range. I really want to see the market break above the moving average. So I'm pretty neutral. I guess if I'd do anything, I'd be long. Maybe stop down here or here. But we could easily just get a bear bar closing on its low. And reason I said stop down here or here is that reason right there. You may fall below it, and that's what happened. So let me just start with a few things. I'm very neutral. Let me go back to saying I'm very neutral, and because I don't want to kind of contradict myself. One of the worst things you can do with always in is if you're confused. I hope you can tell the confusion and difficulty I'm having portraying always in over here, because that means it's not a great always in market. And when in doubt, stay out. You're not getting bull bars closing on their highs. The bulls are not getting great second entry buys. So the bulls probably need one more bar. If they need one more bar, the bears are going to sell. The bears are not getting great stop entries below bars, tails. So this could, as I said on the other day, when you get double tops and measure moves, they never look clear, but 40% of the time, they just go down. So strong enough breakout, probably second leg. We had a gap over here from this high to this low. We have another gap. These lows, this high. So very well may get the measure move down. I'm less interested in buying these lows. Well, let me go back to always in. So what do always in traders do? If they had to do anything, hypothetically, they sell, but not great. Always in bears get out of longs. Always in bulls can buy, but if they do, they'll probably get stopped out below that bar. Maybe they sell below, sell the close. of this bar. Strong enough breakout, probably second leg. If I guess I'd get out of shorts above that bar. I probably wouldn't buy though. Strong enough bar, probably always in long, probably going at least still higher. So okay bar to buy. But a reminder that this is the trading range, make it a second leg, and that's it. Always in bulls, get out. Always in bears, aggressive. Always in bears, can sell. Stop up there or there. Betting on the double top bear flag, which is looking like what we're going to get over here. Decent follow through. Always in short. Not a great stop entry buy. 4 consecutive bars without a bear, without a bull body. Probably sellers above. No reason to buy. I wouldn't, doji's tight channel, not really a great buy either, forcing you to buy 50%. And we haven't closed by the moving average. So still always in short. I probably just, I don't know, I don't like these days. But always in short, probably going a little lower. You don't have to get out of shorts, you can. But if you do, you get trapped, you get trapped. And one of the problems with these types of days, these double tops and bear flags that keep going down, these broader channels, is that they look really weak, but they're forming gaps and they can easily trap traders out of the market. So don't get trapped in the wrong side. I wouldn't buy too many bars down. Okay, I would definitely get out of shorts. May close this gap, find buyers. We're also, another thing that happens a lot where, oh, I'm wrong about that. So never mind there, but I would get out of shorts. Low one short, theoretically bears have to get short again, but I wouldn't do it. Too much risk that we're going back into the apex of this triangle tight trading range. Okay, another double top, but bad signal bar, so never triggered. Bad stoppage or short here, so make it a higher low in the second leg up. But bears, the bulls are just not doing enough. They're not getting good stop entries. Not a great buy. It's an outside up bar. Probably an okay buy, but stop down here. But fairly tight channel, 40% chance you go above here and measure move up. And it failed to trigger, so bears probably still short if they sold this close. They probably don't get out above here. They clearly didn't get out above this bar. And you can see probably going to test this. Probably going to test the measured move target. We're so close to it. And we're there. So what do you notice about here? Very difficult to hold short. Not my favorite kind of days. Great limit order market, not a great stop order market. So, right here, low one short, but I'd be out of shorts. We're at the target, and I don't think we're gonna get something like this. So, I'd just be out and wait for the market to go sideways. Oh, it's only 1 o'clock. So I don't know, you may get this. I thought it was later in the day. 3 pushes down, 1, 2, 3, 4. 4 pushes down. Wedge bottom, 1, 2, 3. Tight channel, first flip may fail. But the reason I'd be out of shorts right here is because it's a very bad low one short. It's a low probability low one short, so probably buyers below. And you'll have to test at least the moving average, which we did. But what do you notice about every big bull bar at the moving average today? Traders have sold it, so they very well may just sell this bull bar as well. And they did. Outside down bar. It's technically an OO, an outside bar, which is a, Al calls it a, you can call it a bull flag or a bear breakout below bull flag. But either way, probably going a little bit lower. 3 consecutive bear bars, probably sellers above. And we're close to the target, so we may have to get there. And there you go. So what happened here? Well, a few things. Channeling down, bulls are making money all day. Also, you know, bulls, let me catch my breath here. Bulls been making money all day. One of these stop entries is going to work. And at some point, you have another bad low win short. At some point, traders are going to stop selling the moving average. So at some point, if traders stop selling the moving average, you get a big bull bar like that, I would not sell with the moving average. I'd consider buying, definitely. So another big bull bar, probably going a little bit higher, may test up here. Surprise, probably second leg up likely. Always in long. Bad follow through, but probably buyers below. Second leg up, mission accomplished. Probably going sideways into the close or a little bit more up. No reason for the bulls to get out of shorts, and we may test up to here, which we are. We didn't quite get above the top of this channel. It makes me think we're still going to get above it, but may have a deep pullback down to here, then test it. Okay, we're above it. So why did I think we're going above the channel? Well, I talked about it a few times today on some other examples. If you sell this close or this stop entry, put a stop above, your risk is really small and your reward is high. If your risk is small and your reward is higher, and you have a small risk, great risk reward. So if you have a great risk reward, selling anywhere over here, stop up here, betting on a measured move down here, then you have low probability, which means if you're buying, stop down here, betting on a target up here, you have a great probability because you have extremely high risk. Makes sense for doing this. Tight channel, first down fail. Big outside down bar, probably going to the moving average, probably going at least a little lower, but it's a surprise. So it's probably strong enough to make the market go sideways. I don't know if it's strong enough to make the market, just melt away or melt down. So I wouldn't necessarily sell the close. Bad follow through, but surprise bar may get a small second leg. It may not be that great of a buy. And there you go. So this happens a lot. When you get a surprise, the odds favor a second leg. But generally, when you get a surprise in a tight channel, you often get a stop entry buy for the next bar. And it tricks traders. It makes traders do one thing, which is the worst thing you can do. You buy above, put a stop below. The second is you buy, put a stop down here. Strong enough breakout. And this is also, in hindsight, you have a lot of bears who are going to sell 50% pullback, which is what they did. And end of the day. So anyways. All right, I was really getting tired, so I had to take a little bit of a break and just kind of rest for a minute. But so anyways, now that I'm a little more fresh, I can consecutive buy client, I can talk more about all this. So anyways, problem with buying here late in the day. Okay, this day, I don't even know what day we're on. What day is this? The 12th of November, 2018. So big bear bar. Probably always in short. However, bottom of a trading range. Surprise bar may get a second leg down. I have to end this video. Gotta go. Thanks.